Hello everyone, welcome to the market outlook for the week. Gaurang Shah from Geojit Financial Services. And after last week, crucial levels being broken of 15,500 on the Nifty and somewhere close to about 55,500 or 55,000 on the Sensex, the downward move has been exaggerated and accelerated. Continuous selling from the FIs on the figures that we saw on Friday as well. FI sold a larger number of shares than what the domestic institution bought. And this morning, on Monday, as we begin the week, the beginning was in the green, but as the day goes ahead, we have seen those initial losses turn into red and then again recover. And as I speak to you, friends, the Sensex is close at 51,450. Up about 95 odd points. Sensex is up double digit at 11 points up, 15,300. Nifty Bank double digit gains of 13 points at 32,750. Broadly, I think this is a very thin line between the red and the green. I think you will see choppiness, volatility throughout the week, but more prudent to see now levels on the lower side, whether they are breached and how much lower can we go from here. Seeing the correction of somewhere close to about 17 or 18% both on the Sensex and Nifty from the all-time highs to the levels where we are trading right now. Come July second week onwards, I think you will see the earnings season unfold for first quarter this financial year. And the feeling, friends, over there is that there could be a little bit of squeeze in terms of numbers, especially for the manufacturing side, since the rising crude oil prices impact would be felt for the entire quarter, that is 3 months, primarily April, May, June. That's when you've seen the rising crude oil prices, and how much of that impacts the manufacturing side is remains to be seen. Our back of the envelope calculation says that metal, cement, more importantly FMCG sector, consumer durable, I think these are some of the manufacturing side sectors which could see a little bit of more pain in terms of earnings getting reported. On the flip side, the crude oil prices, good news, friends. Last week overall, the crude oil prices have corrected 9% overall last week, and the levels are $113 a barrel for the Brent and $109 a barrel for NYMEX. On the rupee dollar equation, we have seen some strength coming back as I speak to you. Rupee is marginally lower than the levels that we saw of 78. Trading with some amount of strength right now, rupee against the dollar, 77.93 rupees to a dollar. Again, the kind of uncertainty that lies, and we have seen that US dollar gaining strength more amongst all the emerging market currencies as well as euro. So there could be a little bit of more strength in the dollar against the global currencies, including the Indian rupee. On the interest rate hike, on recession, the commentary was very clear. We could see more aggressive interest rate hike by various central banks across the world, including US Fed, including India's Reserve Bank of India, Bank of England, Central Bank of England, likewise other central banks across the globe could see moving their interest rates on the higher side on fallback of recessionary pressures, inflation, etc., etc. So this is one particular aspect that we'll need to possibly digest in the coming weeks and months, unless until we see a resolution coming through on the geopolitical front as with respect to Russia, Ukraine, and of course in terms of food inflationary levels coming down. The market could possibly head a little bit lower. That's what our estimates are. And I had mentioned to all of you all 15,500, 55,000, 55,500 both on the Sensex and Nifty. On the Nifty and Sensex are the levels to watch out for. And since we've broken those levels, I think we've also witnessed a meaningful downside. The low that we touched on the Nifty was somewhere close to about 15,180, 90 odd levels is the low that we saw. And on the Sensex, tag below 51,000 is what we saw, and then we've recovered. But I think this recovery, what we are seeing is, it's almost like a daily routine. We open with a little bit of respite on the positive side, but as the day progresses, all those gains get wiped out and we kind of go in the red. How much of selling pressure from the FIs will have to withstand? And let me tell you, friends, it's not only in the Indian equity markets that we are witnessing that kind of a sell-off. FIs across the globe are selling in those markets and taking their money back home in the US. How the US Fed moves itself to protect from recession, inflation, I think the Fed chief will have answers to that in coming days. But overall, we should prepare ourselves for a more of a painful time, if I may. And according to our understanding, I think next 3 to 6 months are going to be very, very challenging for our economy and of course the economies across the globe. In effect, I think the calendar year 2022, even if we get a pass through of about 10 to 12% gains on the Sensex Nifty, I think that will be well accepted and taken with both the hands. Don't expect any miracle recovery unless and until we have some global and local news flows on the positive side. More so on the global front, because locally I don't think there is anything major that we are having as of now. All the events which are there in the backdrop, but globally there are fears. So again, short to medium term, you need to be careful. Long term, try to nibble in, but slow your pace of investment. Since we have broken the crucial levels, I think there could be a little bit of more pain. So if you are, buying about say 15-20%, bring it down to 10% or lower. And of course, select stock and sectors. I think services side could be a little bit insulated with the rising crude oil prices, so you need to concentrate over there. IT, banking, NBFCs are the primary, and of course, life insurance related companies and telecom service providers. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye bye.